Hi guys, welcome to the Monday of a holiday shortened week. I hope everybody's got some really good Thanksgiving plans and everybody's got excited about seeing some family, and at least you're not dreading seeing family, but one way or another, we've got Thanksgiving coming up, and that means we've just got a couple days of trading. And this morning, the focus has really been on those volatility band setups. So what I'm going to do today is I'm going to go over with you one of the trades from the volatility band trading plan, which was Netflix. That was a really good one. It was picture perfect. It's what I'm looking for every day on all of them. And I think it's just important that you get a feel for exactly what it is that I like and why I like it. Then we're going to look at some levels on the triple Qs and Apple going into the afternoon session. So with that said, let's go to the charts. Here you have Netflix this morning. So this is what I was talking about. The ideal setup is when you get either one of the around the horn patterns right around an inflection line, or when you get a short move down to a short sale threshold, or a short move up to a long threshold. And what I mean by a short move is you see how we did a move to the upside on the stock this morning, and then that was immediately followed by a retracement back into these volatility bands. And the nice thing about this morning's setup, if you are an around the horn fan, and I hope you are, because there'll be a new version of that book coming out in 2023, I guarantee it, complete with a giant section on trader psychology. You should recognize this guy right here as an infield fly setup. So you've got a picture perfect infield fly, and that's followed by this really nice sort of short bar down from about 290.50 into 289.70, and that was our first threshold for an entry. And then you've got just sort of the picture perfect scenario we see these day after day after day, where we go all the way down and run the bands from 71 all the way down to 7 spot 20. So you have got here a 298.71 entry all the way down to 297.20. In this case, you had the opportunity to book a couple dollars per share and really get the day off to a good start. Now, let me take a look at what I think is going on with the triple Qs and with Apple going into the rest of the session. So here you see the QQQ. And while we wait for the 200 tick chart up there, 250 tick chart to come up, what you should see is very nice, just a very good, solid, just, wave of moves that indicate that over the course of the session, what we're expecting is that we're going to see some good opportunities to come back up into our anchored VWAPs. It's always important to keep an eye on, these anchor points right here. And that also is going to give us some confluence with these threshold levels over here on the right. These are your volume by price levels. And these are unique to EMS, right? This is an execution management system that has this algorithm built in. And what that does is allows us then to look for overlap between the different points on the chart. And when you see things like a zone that overlaps very, very nicely with this little volume by price histogram out here, what that does is tells you that those are good entry levels for a short sale in this case. So right now, the one that I'm really focused on is this 292.07 area. That happens to be a floor trader pivot line. And those of you who know what floor trader pivots are, this is a no-brainer. For the rest of you, these are from before we really had charting software. And what you're looking at there are the levels that are supposed to define where the value line is going to be. So the primary value line for the session going into the day is up at this red line, and then this green line, which is S1, is going to be the secondary level if we make the move lower. We have made the move lower. You can see we've got this nice sort of sweeping move down into the session. The trend today is definitely lower, and the opportunity is going to be on the short side on the reversals up to those lines with very tight stops. So I know that, a couple of you struggle with where to place stop loss orders. And I would say, if I got in at 282.57 and I was short, then I would have a stop no higher than this threshold up here that defined where the resistance was going to be the last time that we had a wave move lower. And then you always just want to assess, is that the right size risk for me? If not, adjust your share size. And if it is, you're good to go. But the important thing to remember is what you don't want to do is adjust the stop to be comfortable for you. What you always want to do is have the stop be natural. And then finally, another example here of a stock that really plays into natural support and resistance. We've got Apple. And you can see once again on Apple that we've got some really good confluence of things going on, and confluence is just where do things overlap. So we have this zone right here, and you see that this has a very, very clear volume by price algorithm there going on, says that's where the important volume was, and that over the course of the session these are really able to be broken down according to the overlaps between your support and resistance and these anchored VWAPs. Anchored VWAP just takes a point in time and another point in time and says over this period from, in this case, here to here, during that time frame, right, what was the volume weighted average price? So where did most of the trading activity go on during that period? And that gives you an idea then of where you might catch an inflection. So right now on Apple, if we move back up into the pivot and we get into, let's say, this black pivot here, this is second support, and get up and test this line that we had this little infield fly at, you could go short right at that 148.59 pivot, and then the stop would be no higher than a violation of that 148.71 level. And finally, let's look at the triple Qs. The QQQ has been trading in a very geometric pattern all morning. So this again is indicative of, a lot of these stocks sort of follow the Qs, so you're going to be making a decision about whether you want to trade the index or you want to trade the stock. A lot of that's going to have to do with, if you're focused on my style of trading, are you looking to trade with options, are you looking to trade with futures, or are you looking to hold the core stock? So on things like Netflix and Apple, it's typically easier to trade the stock. You can get in front of the options contract. You just need to be careful of where the implied volatility spikes. On something like the triple Qs, it's a little bit easier because this is very, very widely traded. So you can go through here and capitalize on this trend by focusing on all the times that we get a move back up into one of these areas that something significant happened. And so you can see I've had these lines drawn for a while. Things have been bracketed off for a good long time here. And what we have seen is that this level was significant in terms of support and resistance. We did not get the retest. Had we had a retest right there, then we would have had a really good opportunity to go short down into this pivot line. Then we have this area right here at this 282.57 line. That gives us a pretty decent opportunity for a short sale. Got close, didn't exactly hit it, so depending on how you structured your order, if you're using a hotkey to get in, you could get this entry right here. If you had some resting orders and you were super tight up against that line, then you probably didn't get the entry, and the same scenario here. But once again, there were several opportunities over the course of the day, with the best one being right here, and those got you in front of the opportunities and got you in a position to profit, and all you had to do was wait for the test of those threshold levels that you've been looking for. So there you have it. That's the charts. And what you want to do is go through and structure all of these things super logically. So you don't want to shoot from the hip. You don't want to be saying, oh, well, what am I supposed to do now? You want to set the lines up ahead of time and then tell yourself, here's how I'm going to structure this trade should price get there. And the whole point of having multiple opportunities in front of you every day is you want to be able to go and say, well, that one didn't trigger. Like Microsoft didn't trigger today. That's okay. What we did was got in front of the opportunity for Netflix. And if NVIDIA was on the trading plan and it came down into the prices with too wide of a bar so that we couldn't really anticipate where to put a stop, it's okay that we passed on it because we got Netflix. And some days you're not going to get any of them because they're not going to do what you want. But on the days that you do get a good one, on the days that you do get a $2, $2.50 move out of it, it makes it really worthwhile having had it on screen, having been ready for the trade. And I think the important thing here is, right, you want to trap, not hunt, and you just want to stay in front of the opportunities. All right, everybody, I'll check in with you later. Have a great trading day.